Hello and welcome to FidelityConnects. I'm Pamela Ritchie. Today's conversation comes at a pivotal moment for the Canadian economy. With continued pressure on affordability, productivity, and shifting global trade dynamics, these issues are top of mind for Canadians and investors alike across the world. How is our next guest navigating these challenges while maintaining a focus on competition in the financial services sector? We're going to get to that. And what is in his playbook to drive growth and investment across this country? I'm absolutely delighted to be joined today by the Honourable François-Philippe Champagne. He is Canada's Minister of Finance and National Revenue. A warm welcome to you. We are so excited to have you.
What
here.
a day to be together.
What a day to be together.
There's so much news this morning. I used to say, Canada had the presidency of the G7 until December.
I'll just quickly say that everything you're saying is also available in French, but also Cantonese, Mandarin. That's it.
Okay, well, we can go in Italian. I speak Italian as well.
You speak Italian?
So if you want, we can add Italian to the list.
Italian.
French is obviously with a name like Champagne. You would appreciate that. That would be easy for me.
That's pretty easy.
But I was saying that, until very recently, when Canada had the presidency of the G7, my point was to maintain unity under uncertainty. Today, the world is not just uncertain. I think we've moved to a world which is volatile and complex. I think, that's the real
shifts. Oh, I mean, it really
like we've
feels
never
like
seen.
things,
I used to say like the 3S, the speed, scope, and scale of change is unprecedented. Some people would go back to 1945 after the war. Some would go to the fall of Berlin Wall, 1989, 1990. But actually, it's two things. It's geopolitics, which we're witnessing as we speak. It's geoeconomics, which we're witnessing
Absolutely.
with, the price of gas this morning. It's supply chain, which we're going to witness over a long period of time. But it's also technology. It's the combination of AI, quantum, and cyber. So I'd just say for people who are watching, and the people you serve at Fidelity and your customers around the world, I think it's that speed and scale and scope of change, which is really affecting people, in their mindset, in their view of the world. And our role is obviously to bring back confidence in how people see, confidence in investor, confidence for households, but in a very volatile and certainly complex world.
I mean, one of the many things that you're doing and that you mentioned there is keeping Canada sort of fit in fighting mode financially so that we can go into this future that has arrived at our doorstep. We're here now. A couple of comments on there are lots of public service cuts going on. There are lots of things in terms of innovation. There are defense announcements. They're just rolling so quickly we can barely keep up with all the announcements that come from the budget that you wrote. Tell us about how you keep the government fit and on fighting form right now.
That's a very good question. I think it started with the tone at the top has changed and the world has noticed. You may have heard about this speech in Davos, Budget 2025, which
we
was
know
really,
every word.
Yeah, no, exactly. Well, I mean, I've been in politics for the last decade, and I can tell you, rarely you have seen the words of a prime minister, a Canadian prime minister, echoed around the world. I was with the Prime Minister in India, and you have like the Prime Minister of India referring to his speech. You go to Australia, Prime Minister Albanese talking. So, I mean, it changed the tone. That's one thing. Budget 2025 was also a course correction, in my view. In a sense, This is an investment budget. We say we need to spend less so we can invest more. To your point, we had seen the growth in program expenses at about 8%. We need to bring that in a more sustainable level. We needed to put the house in order, the $60 billion of savings. If you look at history, this is comparable to what has been done during Prime Minister Chrétien. This is comparable to what has been done with Prime Minister Harper. And it's very serious. It's about bringing, you mentioned civil service, to a more sustainable level, because we've seen that, we're going back to pre-COVID level.
Right.
And in line with our G7 partners, there's always these ratios. I'm a very big fan of positioning Canada within the G7, comparing us to others to say, okay, and I'll tell you one secret, which now, it will be a few of us knowing, but part of what inspired me in 2025 was and it's going to tell you a sense of perspective, was the infrastructure investment in Germany, the infrastructure plan, which had been seen by many as the mother of all infrastructure plan in the G7. Just to compare, the German infrastructure plan was 500 billion over 12 years, 500 billion euros. If you convert that in Canadian dollar, you'd be at 800 billion over 12. The Canadian plan is $500 billion cash over 5. So you look at Canada, it's the largest shift in investment in infrastructure in the G7.
So that is so interesting because the German example of spending, as you mentioned, is, people might argue with this, but one interpretation is that that is what shifted the international trade, the so-called international trade. So U.S. exceptionalism to invest internationally. It was that moment of suddenly unleashing federal budgets in Europe to spend on defense.
I see the same thing in Canada.
Shifted, and Canada
I see the same thing because I always say, you know, there's very few people waking up in the world in the morning thinking about Canada. So we need to bring our story to the world. You know, I spent, like the Prime Minister, a few years abroad, understanding how the world operates. You know, you look at what, you know, the Director General of the IMF said, the International Monetary Fund, about Canada, said countries which have the fiscal capacity should make wise investment. And she singled out 2 countries, not 5. Right. She said Germany and Canada are the only one in the G7 with AAA credit rating. If they invest in housing, infrastructure, productivity, and innovation, in our case, defense and sovereignty, like Germany, those are going to be investments that are going to generate growth. That's why we said we want to attract $500 billion of investments in Canada, and we're on our way to do that. And our investment is going to generate $1 trillion in additional investment. So I see the story of Canada taking hold around the world now.
It's very exciting to be a Canadian in a moment like this, because you do feel like the world is watching your leadership, the leadership of the country, do something massive and literally generational change going on. I'd love you to help us begin to draw the diagram of some of the investments that you're making. You can take the major projects office ones. You can do some of the red tape that's being removed. What is the diagram, if you were to draw it, from the investments going in from the federal government for investors to take part in? There's obviously large investors that are putting billions of dollars, or could. And then there's the people that you're speaking with right today, the rest of us, who would like to take part in buying Canada with their, $1,000, $2,000,
listen,
$500,000, but not the biggies. How does it trickle down?
That's music to my ears. You're right that when we say build Canada strong, having the strongest economy in the G7, it's appealing to Canadians. We feel proud to be at Canadians, and we say, you know what? And when you look at Canada, well, there's a couple of things we need to do. First, we need to, the Buy Canadian policy for me was long overdue. First of all, we say we'll have preferential treatment for Canadian companies because as we're growing the economy, we should look at the domestic industry, our SMEs and many corporations who can grow with the country. Then there is the interprovincial barriers, because people have said, you may have seen this report also from the International Monetary Fund that says if we remove interprovincial barriers, we could add $200 billion in GDP. So that's work in progress.
Real? That's outrageously high.
I think it's something that, I think as Canadians, things have been very good for us. We've been blessed by geography, next to the largest market economy in the world, Canadian dollar. So I think historically we've been a bit complacent. We were kind of in a bubble, which allowed the Canadian economy to, we succeeded. So we did not focus so much on the low-hanging fruit, like interprovincial barrier. When things are good, you can allow a bit of friction.
Sure.
It's like in a family. Like if things are good, you say, well, these are the small things. But now, because the rules, the international order has changed so much, we need to look at ourselves first. And I like when the Prime Minister said, let's focus on what we can control. There's many things we don't control, but let's focus on what? Major project office, getting our energy to market, building the interties. Because if I look at the G7, to be honest, I'll give you another secret, Pamela. Most people would want to be in our seat. You look at Canada, so we're a big magnet for talent. We have the most educated workforce in the world. Secondly, you look at, we have big industries. To your point, we build ships, we build cars, we build planes. So we have
we're going to build more.
We're going to build more.
Yeah.
We have the critical minerals, and you say, well, this is akin to, what oil was in the 20th century. Critical minerals are going to power the economy of the 21st century. We have abundance of energy, and we're the only country in the G7 which has a free trade agreement with all the other G7 nations. So when I go abroad, I said, never think of Canada as a country of 41 million people. Think of a country that gives you preferential market access to 1.5 billion consumers. So to your point, if you're an investor is looking, yes, you want to be part of the story of Canada. Yes, you want to be part of that growth. And certainly that's something that we want to favor, because I think Canadians are keen. It reminds me, you may remember CDAO. CDAO has been this Minister of Industry after the war, really, well, in a sense, rebuilding the country, the locks, the big things that made Canada successful. And that's really the vision we have, the Prime Minister and I. We want Canada to succeed. We want to be resilient. And we want to put, this country on a path for success for generations to come.
So, and we'll get to the investment. So there's a version of Canada, and we saw some of this in COVID with supply lines getting busted open because we couldn't get things to and fro. But so self-sufficiency on some level of all of these so-called critical pieces, we sort of have it. We got to get them either out of the ground, or we've got to create the industry around it and put the seed money and get the AI layers on there so it all works. But we sort of have the ingredients for self-sufficiency, it sounds like. So can it be Canadian exceptionalism?
Oh, I love that. Think about critical minerals. I mean, we're one of the few countries. We just came from Australia. I mean, you may know that there's different discussions.
They got lots too.
But proximity is everything.
Yes.
I can assure you, when I talk to CEOs, they want to say proximity to resources, market, and assembly line. So Canada in the G7 is in a unique position because we're a net producer of critical minerals, like we're a net producer of oil. So I think what I find interesting, and our viewers would relate to that, is that today people see more than before the nexus between food security, energy security, economic security, and national security. I'm a finance minister, and I can tell you, never as much as today we talk about national security when we're finance minister, because, for example, the recent events that we're witnessing, this could have rippling effect for decades to come. So we need to think about, how these impact. And to your point about resiliency, how do we make Canada more resilient? We start from a strong base. We produce gas, we produce oil, we have critical minerals. We've been a leader in AI.
There's a pivot in there, in the sense that we have had to pivot with the leadership of your government away from some of the export dependence on the U.S. There was a pivot in there. Is this moment a pivot as well?
I would think so. I mean, that's why you've seen us on the world stage. I mean, we went to partners like in India. We were in Australia. Prime Minister was in Japan.
To sell
We've been
our
in Europe. Well,
commodities.
Yes, and to bring our story. And I'll be soon going in Asia as well. I mean, I think it's kind of Canada opening up to the world. If you want to diversify, we said we're going to double our overseas trade over the next decade. So, and we start from a strong base. Like I said, we already have an agreement with all the other G7 nations. Now we're looking at South America. We're looking at Asia Pacific, because many would say, there's an old say that say demography is destiny. So you have to look at where, you have population growth and position Canada. But I would say three things that distinguish Canada in this moment, among many: stability, predictability, and the rule of law. High demand, short supply. The world has shifted in a way that we've not seen in generations. And
something like property laws that you can enforce
property
are
laws,
more important than
investment rules. What I hear from investors around the world is that, the spectrum of views in Canada is really manageable, even in the political field.
That's good to hear.
Because, people would say we're not going in extreme. We're Canadians. And I think in the world, and especially what we've seen now, I can assure you we've seen from our Asian partners, our European partners are looking for long-term supply. Diversification is the best way to manage your risk. And therefore, that's why I'm so hopeful about Canada. It's not just because I'm the finance minister and you would say that, is that when you look at the world today, not as you wish it would be, but as it is, and you position yourself on that, and you talk to global CEOs, they see the attractiveness of Canada at this moment.
Good. So how can we buy it? This is where we go. How do we get to the point where, for instance, the money that you're putting to work to catalyze other private capital to get involved, and then ultimately retail investors wanting to buy Canada? I don't know if they can actually go into it at the sort of capital raise stage of things, but draw us a map of how what you're doing ends up, in someone's retirement account, if that's possible. Maybe not today, but in the years to come. How do we do it?
Our pension funds are doing that in a large way, and that's why people, I've seen more and more interest by what we call the Maple 8. That's very Canadian. So that's the pension fund of Canadians working for Canadians, actually.
So we'll find it in our pensions.
Pension money, in a sense, going there and say they are attractive, but we needed to provide opportunities as well. That's on us. That's why the major project office, because if you have capital, it's incumbent upon us, for example, to structure projects so that people can invest. And we've seen it around the world where people see, for example, you talk about producing more energy. That's going to be key for our prosperity. Getting our critical minerals off the ground and refining, because that's the name of the game.
So are we going to put money towards the refining, or are we going to ship things like oil and then use green energy at home?
Well, we're not going to do like, we're not going to do like we did before. I come from Shawinigan. Trust me, we used to cut the trees. Exactly. So we used to cut the trees and send it across. Right. We're smart. We're smarter. Okay. We're going to do as much as we can. Now, that's why we say, our partnering with the world is interesting, because the refining technologies, for example, they would be with some of our partners. But what we can provide to our partners and allies around the world is strategic supply. Right. And I think in a world like today, the world we live in today, and God knows what it could be in a few weeks and few months. But when you look at resiliency, I think this is what we've been prudent in managing our fiscal position. By the way, we have the lowest net to GDP ratio in the G7, one of the lowest deficit to GDP. So we're good fiscal. We're good, and it's not just me saying that, but international institution bonds market have seen Canada as a serious country with a serious vision, with a serious plan, and I think that the investments we're doing. Obviously, it's going to take a bit of time.
I want to ask it's going to take time. Well, the financial sector, which, the regulations that are in there, there's been lots of stories about, for years, there've just been more and more and more. That's sort of halted now. There's a little bit of a cap on further regulation. I guess the question is, at what point does the banking sector expand? Can it expand? Yeah. Is this the moment for it to expand? More money can come through in a more open banking scenario. That was tricky.
But you read the budget. This is great.
First, that's a good start. Of it, right? Yeah. Just the
open banking. We want to give. It's very simple. For people who are watching, these terms may look very complicated, but what it is that you want to give more power to investors and people to do what they want with their investment. So allowing them to move more freely. Reducing friction and costs related to movements of money.
You're in favor of open banking.
Definitely, because I think what you want is more opportunities, more choice, more competition. I think we all know that this is good. We are very proud of the stability of our banking system. This has served Canada very well in periods, for a very long period of time. But at the same time, if you look at Canada, you look at the UK and other markets, you want to allow also for innovations to come, and I would say technology is going to be our friend in that respect, and therefore this is going to be to the benefit of your viewers and people who want to have more choice and decide what they want to do with their money and their investments.
So a number of questions coming in. Here's one of them. Are you going to be implementing a pipeline across Canada as opposed to importing LNG from Australia? So this is the cross the country pipeline question.
I think, there's a number of projects. You may have seen Bijunar recently. That's on the East Coast where you've seen an announcement. This is going to be one of the least emitting oil field in the world. Obviously, it's offshore. That's new technology, but this is good for Canada to bring like investors. This is Equinor from Norway, which has made an announcement. We've seen LNG Canada, which, I would say
it's up and running now.
Thanks God
Thank
have
God,
that, because now you look at
we should
the
have done it
importance.
10 years ago. But anyway, it's
exactly.
there. It's there.
But there's also a plan about expansion, and I would say that people see that. We have a number of other Cedar LNG. There's another project also on the West Coast. So I think these projects make more and more sense, because no one could predict when we supported these projects at the time. But you would agree with me and your viewers that in the state of the world today, having additional capacity, particularly from a country like Canada, which offers stability, predictability, and proximity to the Asian market, I think this is good news for our partners in Asia and in Europe. So I think you'll see more. Obviously, you need a proponent for that. TMX, the government stepped in at the time. And again, it's a great thing that we have TMX now, because we can contribute with what we have to the supply of oil.
We'll see if that gets even bigger, or if they're going to put this new pipeline through. We'll see where that all goes. A couple of questions. So this is the interprovincial trade, coming back to what you mentioned. Beyond the liquor board discussions, which I understand are very, very important, in other serious areas, how close are we to bringing down these barriers?
We need everyone to push on that. Professional recognition, for example. If you're a nurse and you want to practice across the country, we just need to perfect what the fathers of the Confederation started. There's some work which is unfinished. There's work in progress. But I'm reminded, the $200 billion number, in the world we live in, we can't afford as a nation not to have more fluidity between provinces and territories. And at the end of the day, we all win. These things have been creeping up over time. There's some small rules about the size of tires and the jackets and the helmets. And we need to get rid of all that. Now, there's been good work done, but there's more to be done for me. And I think in the world which is more complex than before, like I said, those are low-hanging fruits. Those are things that you and me and everyone watching, which is Canadian, this is within our control.
Do you think that we can somehow make trade and the trade talks that are coming up with the U.S. and Mexico be a balm or a calming moment for the mess that's going on in the Middle East, frankly? Like, can it be a win?
Well, I think, if you look at this situation today, we've not been saying it so loud, but we have the best deal of the world in a way, because 85% of our, and beyond, it's closer now to 90, is going tariff-free under the CUSMA agreement. The effective rate is around 5% and a bit lower than that now, depending on how things are going to be adjusted. So I would say, if you look at the position of Canada and Canadian exporter. Now, that being said, the challenge is that it felt very strongly regionally and by sectors. Yes. So if you're in the auto industry, you don't feel this way. If you're in the steel industry, you certainly don't feel this way in Hamilton. If you're like in softwood lumber in Quebec, you don't feel, or in BC, that's not a reality you feel. And same thing on aluminum. So what I would say is that on a macro basis, we have been able to be in a position which offers Canada the best possible deal with respect to trade with our trading partner. And there's a reason for that, because when I go in Washington, you'd be pleased to be with us when we do that. I always go there and say,
I'd be delighted.
No, because I said, I hope you're happy to see me. Because by the way, Canada is the largest customer in the United States. We buy more from the US than China, Japan, and the UK combined. Yeah. So I just want to put that in perspective. It's not like we're going there elbows down. It's like we are their largest customer.
Let's have a party.
And 2/3 of the states depend on Canada for export. So there is a reason why we are where we are. Is that the nature of the relationship between Canada and the US is unique. There's steel, aluminum, there's many things that oil, for example, gas. So we are integrated in many ways.
You're sounding positive. I have to let you go, because you could stay for another 20 minutes. But
I would stay with you another hour.
You can't. You got to go. Thank you for joining us, Minister. We look forward to seeing how we can invest in all of these amazing ideas. We'll be watching carefully, and we hope you'll come back and visit us anytime.
Thank you very much. It was a real pleasure.
Thank you, Mr. Champagne.
Thanks for watching or listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on YouTube, LinkedIn, and Instagram. We'll end today's show with a short disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again. We'll see you next time.